When passing prop firm challenges, should you optimize for speed or for win rate? Essentially, is it better to pass as many challenges as possible or to pass or fail as quickly as possible so that you can build up a large bank of funded accounts which can then be used sustainably to get payouts? In this video, we're going to walk through an example of how you could use one of our expert advisors and specifically use a high risk reward strategy to either pass or fail very quickly. So for this video, what I want to show you guys is the use of our German Lightning expert advisor to pass prop firms or fail prop firms very quickly. Obviously, because the system has a very strong edge, you should be passing quite a few more than you are failing, but I wanted to just walk you through the math so that we can see, would this approach be viable? Would we be able to use this approach to get a bunch of funded accounts, which we could then trade with lower risk? But essentially, we're taking the actual challenge with a slightly higher risk approach, well within the actual prop firm's guidelines. However, a bit more aggressive, but then as soon as we get the funded accounts, we can then scale back the risk a bit using perhaps a different strategy, but still within the same ballpark, just so that we're able to comply with prop firm rules, but perhaps use an alternative method of passing to be able to just move faster. So starting off, let's actually discuss what the German Lightning expert advisor does and why I chose this particular expert advisor, which is one of ours from the prop firm bundle, for this specific example. So the German Lightning trades the opening range breakout for the DAX, so the German 40, or essentially the index that tracks the 40 largest companies on the German stock exchange. And what it does simply is it will place either a buy stop or a sell stop at the highs of the range right before the Frankfurt, the extra markets open, and it will then take advantage of the volatility at the open to make a quick profit. And the really cool thing about this bot is that it has a very, very high risk reward. And if you look, for instance, here at the win rate, we're sitting at around 40%. So it's a lower win rate, higher risk reward bot. But if you look here at the actual average profit trade over the average loss trade, we can quickly just do this in Excel to calculate it, and we're at around a 2.3 risk reward. So that means sometimes we're going to have a 4-to-1 risk reward, or a 3-to-1 risk reward, or a 2-to-1 risk reward, but it balances out and averages out to around a 2.3. So the most important reason as to why we're using this bot is because it has a very high risk reward. And we can take advantage of that to be able to use this approach even when prop firms don't have super high leverage. And to illustrate that point, let me bring over our max leverage calculator. And essentially, this is a simple spreadsheet which walks you through, in the case of here, you just put in your account size, but we're using a $5,000 account. How much are you actually able to risk per trade using a certain amount of leverage? So here we're assuming 20-to-1 leverage on indices and gold, but let's say, for instance, on the German Lightning, we only had 10-to-1 leverage. This is how our risk would change. And pretty much it calculates based on the stop loss and take profit levels, as well as how much leverage is available, how much you're actually able to risk. Because if you have only 5 times leverage, you're only able to trade with so much buying power that if you're using a very tight stop loss, you're not able to actually risk more than 0.5% or 1% per trade, and this can severely limit your ability and your speed to pass prop firm challenges. So the reason why this German Lightning is quite cool is that even if you have relatively limited leverage, let's say 5-to-1, you can still risk 0.75 per trade, or 10-to-1, you can risk 1.5 per trade. So it enables you to use fairly modest amounts of leverage, but still manage to actually trade with decent size. And specifically German Lightning, in a normal approach, I typically run it with less risk per trade just because, going back to these statistics, it's a lower win rate, high risk reward bot. So you typically would need to tolerate sometimes runs of losers, and if you're risking a large amount, you can perhaps blow the account. But I digress. Let's move over now to this backtest tab where I'm trying to illustrate my point. Essentially, in this experiment, we're going to test to see if we risk 2% per trade on German Lightning, and I believe this was on a $1,000 backtest, but you can just 5x this for a $5,000 account, or 100x this for a $100,000 account. how quickly would we either pass and or fail a one-phase prop firm challenge? So here we're saying that our profit target is 10%, our max total loss is 6%, and we're assuming a static max loss, so no trailing. And the general hypothesis here is if we go in with 2% risk per trade on a high risk reward system, we're still staying within the prop firm's no gambling rules of only risking 2% per trade. But using this system, we can sometimes also capitalize on 6% profit per trade, 7% profit per trade, and use that to pass or fail really quickly. And the hypothesis that instead of slowly trading a prop firm account for a month or 2 months to eventually pass, we're pretty much just going to like churn through the accounts, but not actually churning, so that we're able to kind of build up a bank of prop firm accounts. And essentially the approach here, and the approach that I'm planning to take, is to try this across multiple different firms simultaneously so that you are not like opening and closing too many accounts with one particular firm and getting too much on their radar. Second of all, we're using a high risk reward system here so that we can never risk more than 2% per trade. So we're still staying within that general like no gambling best practices ring of prop firms. So if I walk you guys through here, you can see that, for instance, if we were to start, and I just ran a 1-year back test from March, this first account would start, and within 3 days or 3 trades, we would fail. Then we start another one, and we start off with a winner, but then we have a run of losers, and then we fail. And then here we start one, and we then have a few winners, a few losers, but then we pass, right? So we're seeing here, if we look at the dates, we're actually like usually within the span of a few weeks or sometimes even a few days, we're passing and or failing quite quickly. So here's an example where we start, we fail in 3 trades. But here, within 2 days, we pass. Within 2 days, we pass. Within 3 days, 3 days, we pass here. So essentially, because this bot has sometimes long runs of winners or has such a high risk reward, you're able to capitalize on that to pass very rapidly. However, because this is a low win rate system, you're also quite often going to have runs of losers. Like you can have 5 losses in a row, and those, if that happens, and that is expected to happen, you will blow the account. So this approach pretty much says that if you're willing to just make the investment with the accounts, knowing that you're going to lose quite a few, you can take this approach to kind of build up your bank of prop firm accounts and effectively kind of build up a repository of them. And as soon as you pass, you would then change the approach and perhaps use either German Lightning with much lower risk, or perhaps another expert advisor like our US Lightning, which you can put to a lower risk threshold and then just like clip away your profits slowly but surely. So a few different approaches here. But effectively what this is showing is that I ran this with a $15,000 account from GoatFunded, but I probably would start with the cheapest account possible just to make sure this works and we actually get payouts. And effectively, like using this approach over the span of 1 year, we would have started 26 accounts, we would have failed 11 accounts, and we would have passed 15 accounts. So here we're still getting a pass rate of around 58%. So in the grand scheme of things, seeing as like the average pass rate is around 30% for like excellent traders, and I think on average it's like it's in the single digits. This is quite a good hit rate for passing accounts. And then effectively here, like for a cost of $3,000, assuming the GoatFunded approach, we would get around $225,000 worth of capital. And on that, we would only need to make around 1.38%, not taking into account profit splits and whatnot. Let's assume 2% to be able to actually recuperate our investment. So as long as we're able to make a relatively modest amount of returns, we should be able to recuperate our investment through this. The risk is ultimately that you can get banned from prop firms because perhaps they could view this as more of a churning or gambling behavior, but really the mitigating factors we did to prevent that are that we're going to use small accounts that we don't really get on the radar. We're going to spread out across many different prop firms so that we're not opening or closing too many accounts with one given firm. We're only going to start and pass one account at a time, and every time we start and or pass an account, we'll just allocate a bot to it. So we're not going to be like constantly opening and closing accounts just with the same firm. And German Lightning enables us to risk 2% per trade while taking this approach. So high risk reward is really critical for this type of strategy to work. So guys, I'm planning to start this in the next few days with a small $5,000 account, and then I will keep you guys posted on if the strategy works, the speed of passing, and how we can use this for more of a prop farming approach. Guys, hope you enjoyed the video. Take care and leave me a comment if you have any questions.